Hello and welcome to AI Market News by LM. All right, let's jump right in. The market today? Well, it was gripped by a whole lot of caution. We're going to dig into why the super hot AI sector is suddenly getting the jitters, how a big debate over the Fed's independence is stirring the pot, and get this, we'll look at a pretty shocking development with one of tech's biggest names. So yeah, let's get into it. Okay, so how do we actually measure the mood of the market? Well, one of the best tools we have is the Fear and Greed Index. You can think of it like an emotional barometer for Wall Street, really. It mashes together 7 different factors, things like market momentum, volatility, you name it, and boils it all down to just one number. And that number tells us, plain and simple, are investors feeling greedy and ready to buy, or are they scared and running for the hills? So, what's the verdict for today? Well, the index is screaming caution. It's like a wave of nervousness is just washing over the markets. And a huge part of that anxiety seems to be coming from the AI sector. Yep, the very same engine that's been driving this whole rally. It seems investors are starting to tap the brakes and ask, hey, has this AI boom gotten a little ahead of itself? But you know, it's not just about tech getting the jitters. There's this other cloud of uncertainty rolling in, and this one is coming straight out of the world of policy. And it all centers on a debate around the independence of one of the most powerful financial institutions on the entire planet, the US Federal Reserve. So what kicked this whole thing off? It was this comment right here from the president, which basically signaled a pretty strong desire for lower interest rates. And that immediately raised all sorts of questions about political pressure being put on the Fed. What could that mean for monetary policy down the road? The market hates that kind of question mark. So how did people react? Well, what's really interesting is how a top candidate for the Fed chair job, Kevin Hassett, responded. He had to walk a very careful line here. As we can see from his main points, he came out swinging to defend the Fed's independence. He was basically saying, look, our decisions have to be based on cold, hard data, not politics. He made it super clear that while, sure, the president has an opinion, every single committee member is totally free to vote their own way based on their own analysis. So what's the big takeaway from all this? Simple. This whole debate just throws another layer of political risk into the mix. And if there's one thing markets absolutely hate, it's uncertainty. It's like the enemy of stability. And we can see the fallout from this unease crystal clear when we look at today's market snapshot, which, spoiler alert, was just a sea of red. Yeah, that nervousness was pretty much everywhere. Let's start with the S&P 500. This is our best snapshot of the entire US stock market, right? It took a pretty big hit, ending the day down 1.07%. That's not just a small dip, that's a really clear signal of some widespread concern among investors. And as you'd probably guess, the tech-heavy NASDAQ, it got slammed even harder. It fell a whopping 1.69%. This really just hammers home how all those worries we talked about with the AI sector are translating into actual painful losses for some of the market's biggest growth names. And this risk-off feeling, this desire to avoid risk, it's not just contained to stocks. We're seeing it spill over into the currency markets too. Let's take the US dollar versus the Japanese yen, for example. It's a key pair that traders are always watching. Right now, the market is just incredibly tense. When we look at the trading data, we can see buy and sell orders are packed super tightly together. It's basically a massive tug of war, with traders just struggling to figure out which way to go with all this uncertainty swirling around. Okay, so these are a lot of big, abstract market moves. To make this a little more real, let's zoom in on one company's story that honestly captures this whole anxious mood perfectly. So, to see how all these big picture fears can crash down on a single company, all we need to do is look at Oracle. Seriously, the tech giant has somehow found itself right in the middle of all the market's AI jitters. It's basically become a poster child for the growing worries about just how much AI is going to cost and how long it's really going to take. So what's the problem? Well, the heart of it comes from reports about their massive, and I mean massive, infrastructure build-out for AI. There are whispers that some of their key data centers, the ones being built for a huge partner like OpenAI, are facing delays. And that has totally spooked investors who were betting on a super smooth, super fast AI expansion. And this anxiety has had a truly shocking effect in a place you would least expect it, the normally sleepy, stable world of corporate bonds. Just take a look at this chart. That black line, that's the yield on an Oracle bond, historically a super safe investment-grade investment. It has skyrocketed above the blue line, which is the average yield for, wait for it, junk bonds. Let that sink in for a second. The market is now demanding a higher return to hold Oracle's debt than it does for companies with way worse credit ratings. That is just a stunning turn of events. And the numbers themselves just drive this point home. The yield on Oracle's bond that matures in 2035 has jumped all the way to 5.9%. That is significantly higher than the 5.69% average for a whole bucket of BB-rated or junk bonds. It just signals a massive shift in how investors are thinking about the risk associated with this company. Okay, so with this really cautious mood just hanging over everything, what's next? What should we be looking out for? Well, if we check out the economic calendar from investing.com, there are a few key events coming up that could either calm things down or, add a whole lot more fuel to the fire. Yeah, these next few days are going to give us some fresh signals on the health of the U.S. economy, and they could absolutely sway how everyone is feeling. We're definitely going to be keeping a close eye on the manufacturing and housing numbers, but let's be real. The main event is going to be the speech from FOMC member Williams. That could give us some major clues about what the Fed is thinking right now. And all of this leaves us with the one big question as we head into the rest of the week. With these twin headwinds, you've got the policy uncertainty on one side and the nervous tech sector on the other. Is fear going to keep its grip on the markets? Honestly, that's the key question on every single investor's mind, and we'll be watching right along with them to see how it all plays out. All right, just a quick reminder for us all. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used to put this together are listed down in the video description. Since this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. And finally, super important, this video does not provide any investment or trading advice. Please make all investment decisions at your own discretion. Thanks so much for watching. If you found this breakdown helpful at all, hey, don't forget to hit that like button and subscribe for more AI market news. We'll see you next time.